What is going on, investors? Hopefully you guys are having a great day, and it's always a good day when a major stock has earnings, and that was Nvidia today, ticker symbol NVDA. Now, over the last year, stock's up huge, 77%, but we've started to give back some of those gains year to date. The stock's down about 9%. I'm seeing in the after hours, after reporting Q4 earnings that just came in, and we'll get into them. We'll take a look. This is like one of my most favorite slides in all of the stock market. It gives you a quarter over quarter view over at Nvidia in their different business units. I wish all companies did this. There's some interesting stuff happening with some of the trends, and it's not just in gaming and data center. We're actually seeing some exciting stuff with Nvidia on other areas of their business. Come over here, take a look at the revenues and the profits, just like we always do, the balance sheet, the cash flows over at Nvidia. As you can imagine, they're fantastic. Now, in the after hours, stock's down just marginally, and I know I got a lot of lines on here, but I will explain this from a technical perspective. I think one of the reasons why the stock is down about 9% in the after hours, it's just kind of hanging out, is from a technical perspective, this one is painting two different pictures, okay? And so I'll talk about the two different pictures it's painting and how you will know which way, depending on if it goes up, it's going to signal one thing. If it goes down, it will signal another thing. Obviously, when stocks go up and down, it tends to help you make your decisions. I think Nvidia is like kind of at a balancing point, and we'll talk about which way it goes, and because I think it's going to go there pretty quick based on how it's setting up from a technical perspective. We also get the earnings out of the way, and they were fantastic. Revenues coming in at $7.64 billion. You do have to keep in mind, this is a $662 billion company, and for the full year, we had just $27 billion worth of revenue. I say just because off $27 billion worth of revenue, a $662 billion market cap is pretty hefty, and then when you come down to earnings, you're paying a forward PE in the 60s on this one, so you have to be comfortable with that. But look at this year-over-year growth rate. Put this in your pipe and smoke it, all you Intel fanboys, because this is the reason why the stock gets this premium valuation and Intel does not, because you got 52.8% year over. Anytime I got a chip stock, I got to rub it into the fanboys. We give each other hard times in the comments, but it's all good. This is business. It's not personal. Now, that revenue did beat by $210 million. We talked about how shares initially were down 3%. They've recovered a little bit. From a technical perspective, it all makes a lot of sense. Now, they did give us Q1 revenue guidance. That's the quarter we're in right now. We'll see in 3 months when that is reported. Revenue is expected to come in that $8.1 billion range, so that's another $500 million on top of what we just did. Now, unfortunately, as if you've been following the channel on our Friday Fang Stock recap shows where we've included Nvidia into that group, they had an arm write-off about $1.36 billion as that deal fell apart in the most recent quarter as well. Now, Nvidia's quarterly revenue trends, we see gaming year over year, you went from 3.4 billion. Last year, you were just at 2.5. Take a look at data center. Hello, you went from 1.9 all the way up to 3.2. Obviously, the two dominant revenue centers are this gaming and data center, and we're actually seeing data center maybe potentially surpass gaming at some point, which would just be absolutely phenomenal for this business. But what I'm also seeing down here is professional visualization. Take a look at this. We went from 307 to 643. Obviously, if you can continue that type of growth year over year, you'd be over $1 billion in revenue in a quarter on that business line. That would then finally give Nvidia actually 3 different business lines over $1 billion. This professional and visualization, you might be wondering what this is. This is Omniverse. This is Metaverse. I actually saw a demonstration of this software, which is the bulk of these revenues, I believe. It's other pieces of software as well. But inside of here is some really cool software that combines some Adobe Photoshop, some Autodesk modeling software to allow you to build 3D models and things like that using NVIDIA servers. And oh my goodness, it's a very cool piece of software, and obviously it has gotten a lot of traction, especially over the last couple of quarters. You've seen really this segment of the business really increase. And I know a lot of people are going to get on and talk about gaming and data center. Look, it's great. I don't expect these business lines to really slow down at all. The icing on the cake would be if we can really build up this professional visualization into a $1 billion, $2 billion, $3 billion business, because you can imagine the margins on that business might be even better than their current business. This is why the stock has a premium valuation, and it always has. Now, on terms of our revenue, that came from $5 billion last year all the way up to 7.6. This left-hand column is our most recent quarter. We see our gross profit coming in at $5 billion. I tell you what's so impressive about this company is so much of of the revenue flows down into the rest of the balance sheet. So off $7.6 billion worth of revenue, we had just $2.6 billion worth of costs. So we keep $5 billion. Then we have R&D costs and selling and marketing. Take a look at selling and marketing. You grew your revenues by 52%, and your selling and marketing from a rounding perspective is almost identical. It went from 503 up to 563. That's basically nothing when we're talking about numbers this big. Their products sell themselves over at Nvidia, and on top of that, they're not burning a bunch of money in G&A cost as well. We did spend a little bit more money on research and development, as you'd expect, from 1.1 billion up to about 1.5 billion. So our total operating expenses went from 1.65 up just barely to $2 billion. So you take this 5 billion, you minus off 2 billion, and you come down to income from operations at nearly $3 billion, more exactly $2.97 billion. Last year, you were about 50% lower at 1.5 billion. So here's what I talked about with this company. Off of $7.6 billion worth of revenue, 2.9 billion comes all the way down to income from operations. This is after you pay all your employees, all your expenses, you clear that. And then you come down here, you pay some income taxes, and you clear all the way down to your bottom line, $2.8 billion, or in this case, quite frankly, all the way down here to $3 billion. On for the full year paints the identical story. Take a look at this. Off $27 billion worth of revenue, 9.7 billion flows down to the bottom line. It's not quite 50%, but it's pretty darn close. It's just absolutely phenomenal. That's why if you continue to believe in these revenue trends continuing to go up, well, this is a perfect company to invest in, because this is literally about as good as it gets in this sector. There's people certainly will argue that this cannot continue, but if it keeps continuing for a reasonable period of time, there's certainly more gains that are likely had with a stock like this. Now, in terms of their assets, got a crap ton of cash on the balance sheet now, $21.2 billion. They were probably kind of building this up for that ARM acquisition. They probably wanted to have a little bit of cash there to help complete that deal. Well, now that's fallen apart and they're sitting on a fat wad of cash. They've got literally, I mean, just your total current assets, that includes a little bit of inventory as well. You're in that $28 billion. They have a ton more cash on this balance sheet. And so my guess is they had to build up cash to close that ARM deal. And now, since it's not closing, they're just sitting on a boatload of cash that they really, quite frankly, don't really need. Take a look at long-term debt over the last year. You went from 5.9 up to 10.9. I don't want to speak for the company, but again, my belief is this company was building up cash through the debt markets to raise money to close on that ARM deal. And since that did not go through, well, I don't know what they're going to do with the cash. Anybody's guess at this point. Take a look at this from cash flows from operations. You had $3 billion in net income. This is for the 3 months. You had $3 billion of net cash flow into the company. It's the exact same picture for the 12 months. So when you look at a net income number over at Nvidia, it's identical to their cash flows, almost. Okay, you had 9,752 on that net income. That's $9,752,000,000. And you flowed $9.1 billion down to net cash provided by operating activities. It's absolutely fantastic. Here's that issuance of debt, about $5 billion. They repaid about $1 billion. But all things being considered, this is a fantastic company from a cash flow perspective, really good from a balance sheet perspective, because now they have all this cash that I don't know what they're going to do with. And on top of that, you have a company that basically prints money unlike any other company that we've seen outside of maybe Apple, maybe Microsoft, but I don't think Apple and Microsoft even have these type of margins. Maybe we're talking about Google in this sense, but this is a reason why people have elevated this stock. It's with very, very good reason. Those are as good of fundamentals as you'll see. Now, when you match that up to the $662 billion valuation, I can understand some investors saying that's a little rich, and I agree. But obviously, when you factor in also the growth rate and the sector that this stock is playing in, and not only that, it looks like they have another business unit on the brink of maybe becoming a major profit center for this company. Well, there's probably a reason why it's got a big old valuation on it. Now, from a technical perspective, okay, so I have this purple line right here. This stock is, depending on how you draw this in, okay, some people might draw it in up here, down here, down here. There's a bunch of ways you can tilt this purple line. And from a technical perspective, oftentimes you can draw lines until it tells you what it wants to tell you. But longer term, this one is probably technically in an uptrend still, okay? There's some people that might argue that it's it's hanging on a line, it's back testing up to that. I don't know. So because that line isn't telling us anything specific, I'm going to take it out. I know for a fact though, we have a bed of support down here in the $220 to $230 range. This candle, I should really make this a square. You have demand for the shares between, I would say, all the way down to 210 up to about 230. There's certainly demand. Now in the shorter term, I'm going to take that line out here. We've got this dark green line. Shorter term, we're creating a series of lows here and a higher set of lows. And in the after hours, we're starting to create another grouping of higher lows. So very shorter term, we're talking about just over the last month, stock's actually in an uptrend. Now in the intermediate term, going back to last November, basically the last earnings call on this one, we're actually in a downtrend. We're making a series of lower highs. And if this completes it again here, this stock would actually head lower and likely towards our area of support down here at 220. Now, the way I'm playing this one, since some of you that follow the channel know, I bought this one all the way back. I don't know when it was. It was back, I think, after this earnings drop or something. Stock was like at $40 split adjusted. They had a split back in June. I can't remember what the split was, but I didn't buy them for $40, but split adjusted, that was my cost. I sold out of this one. I took some profits on this one, and it's nothing against Nvidia. We've just gone through the financials, and it's not saying that's something that you to do. Is portfolio specific to me. The fact that I had such massive gains in this one. Also, I feel that from a fundamental perspective, in order to double this market cap to go to a $1.5–2 trillion company, boy, I think while they are growing rapidly, they're going to have to continue that growth rate just in an area, in a sector that is marginally hard to continue that. So I took some profits on this one. But what I'm looking for is really probably a break to this upside. I think you break to this upside doesn't necessarily signal an immediate buy, because I think you'll retest these areas up here. These sellers would emerge. What I'm waiting for is to see if this one wants to go sideways. If it wants to go sideways, your buying opportunities are down here under, I would say, $240 per share. Your areas to sell are likely not accumulate. The shares are up here at about 331. I think that's the high probability. If this one does break down, I will step in here and purchase some shares of this one as it moves down. The valuation makes more sense. But from a fundamental perspective, there's only 3 or 4 other companies in this stock market that look as good as this in terms of revenue growth, and not only revenue growth, but flowing that revenue all the way down to operating profits and net income and free cash flow. I mean, I would keep going on how much I love this company, but year to date, it's down 9%. So if this one's not in your portfolio, I think you can seriously think about taking some small nibbles on here. Just keep in mind, from a technical perspective, it's painting 2 stories: short-term uptrend, intermediate-term downtrend. Longer term, probably still in an uptrend. So if all those cancel out, the stock is probably likely to head higher in the coming days. That was Nvidia. Hopefully you guys enjoyed that video. Good luck with your investments.